My name's Dave. I work for the Eco Foundation. This week, we have the Artemis team with us. Anthony has been kind enough to join. We're going to do a little deep dive into stablecoins, into some on-chain metrics, and how Artemis is shedding light on what's going on with the growth of the stablecoin industry. So, welcome, Anthony. How's your day going so far?
Thank you. Great. It's a good time to be in the stablecoins space. There's a lot of activity. I think there's a lot of positive excitement, and Circle just IPO'd last week, and with incredible reception. And so, honestly, like, the vibes are good.
Yeah, for sure. It's funny. Yeah, Circle's IPO was just last week, and it feels like it was a million years ago because of the number of things that have happened even since then.
Yeah.
Yeah, Privy was a huge one. That's another massive win. I mean, it's gonna be a really interesting product suite that comes out of that, and the Bridge acquisition as well.
Yep. Yeah, and I think a whole bunch of different infrastructure folks, like the turnkey guys, I think just raised the B. I think there's good momentum with honestly, like, stablecoins and institutional adoption of crypto. I think that's been a long time coming, and for the space to grow 100x, we need to work with businesses and institutions.
Yeah, for sure. I agree totally. Awesome. So, just sort of like wading into the shallow end to begin with, do you want to give just a real quick background on yourself, the background of Artemis, how it got started, how you got into it?
Yeah. Quick background on me. So yeah, I'm Artemis, co-founder of. I'm Anthony, co-founder of Artemis. I started my journey in tech as one of the early engineers of Venmo. I basically built a ton of the backend infrastructure and maintained it and scaled it over my 6.5 years there. It was an incredible ride. I wrote a lot of bad code in my early 20s, but that's how you learn how to be a better coder, and I think my main takeaway is just like, man, like, payments and infrastructure sucks, frankly. Like, it's very legacy, and it sucks because when there's no instant settlement, it causes all these like issues that require dozens of edge cases and millions of lines of code to like handle. Like, it causes a lot more issues when for example, we had to just like all these hacks around the fact that we don't know when we're sending money from one user to another whether the originating user actually has the funds in their bank account. Like, Plaid didn't even exist back then, and so it's like we had to basically front the money and like loan it to the user behind the scenes and hope for the best that we actually can collect it. And so we had to build all these statistical models to like guess whether that person actually has the $10 in their bank account, and we're not going to cause them. And so when crypto came by, I was like, this is incredible. Like, and like, this is an internet native way to send value across the ether. And so I got really bullish, and so left Venmo, took a detour to business school to find my co-founder. Was very grateful to be able to partner with John Ma, who's one of my best friends from business school, and started Artemis as this data company that we wanted to usher in this new era of financial infrastructure. And the way we saw it is that there needs to be much more transparent data and sort of transparency in the space in order to like usher in the institutions and the businesses into this sort of new, I don't even know what to call it, new paradigm.
Yeah, makes total sense. That's really interesting that you mentioned the sort of like opaqueness of the traditional financial system that maybe some people aren't aware of, and the like perceived openness, transparency, and access to data in crypto, and that being your light bulb moment. Because I was literally just like reading through your article about the difficulty of stablecoins and like you guys breaking down some of the myths associated with that. I thought that was really interesting. Like,
Thank you.
The perception of like data being accessible, open, and transparent for crypto isn't necessarily true. And like Artemis is in the process of solving that. So can you double click into that a little bit and just keep the ball rolling on that same topic for a minute more?
Yeah, for sure. I do have to shout out to our engineer who wrote that article. I can't take credit for it. He's way better an engineer than I am. So Sebastian Melendez on our team, he's our like stablecoin and RWA crypto data sort of guru. And so absolutely, I think, but fundamentally, blockchain data is pseudonymous, right? So, and that's where it makes it really hard to actually get insights out of crypto data. So it is technically open and transparent, but two main things really hold it back from being able to, because ultimately data itself is useless, right? I can spit a bunch of numbers to you, but like, why does that matter?
Yeah.
What matters is that you can make strategic decisions and actionable decisions out of that for your company, for your team, for your DAO, whatever it is, right? And so in order to get insights, it's tricky because one, every blockchain is idiosyncratic. I think at least all the EVM ones are somewhat similar, but there's still a huge long tail of blockchains that are not EVM based. And really every team that is building on these blockchains also, there are some overlap, but like everyone's writing bespoke smart contracts to handle these interactions on the blockchain. And so it's just kind of a mess. It's not standardized. Sebastian in his blog post mentioned some sort of like Web 2, Web 1 even examples. Like, I don't know if I'm old enough to remember the days of like DVD versus like VCD and like,
Yeah.
and like, there's a standard of like, I think, yeah, there's like no standard of like media format, right? And we're in this era of blockchains where there's like no standardization. And like every new blockchain, like right, Aptos and Sui are on a completely different architecture than Stellar, than EVM, than Solana, etc. So that's problem one. And then problem two is that all data is pseudonymous. So you can see what's happening, but you have no idea like what smart contracts, like what this mumble jumble like hash means for like, hey, like who is this actually? Like which entity is that? Is that Coinbase? Is that Binance? Is that Ondo? Is that Circle? And so the myth is that like you actually need a lot of off-chain data to augment the on-chain data before you can get any sort of insights, right? And so the off-chain part is the hardest part. And I believe in the privacy features of crypto. I think that's really important. But at the same time, it's like if we can preserve some of that privacy, I think PII is really important. Like we shouldn't be doxing like individual users, but at a high aggregate level, I think it's really helpful to know what is going on in blockchains if you can like tag large entities, right, and see that, hey, it's like this is how much Coinbase is doing. What is Coinbase doing? How much trading is happening on sexes versus dexes. These are really important data sets to help the industry just like operate more efficiently and operate better.
Do you think that's the fine line, or the happy middle path is sort of like open, transparent public institutions, or like larger institutions, and more privacy focus around the individual level?
I think, yeah, I mean, I'm no privacy expert by any means. I personally think that, I very much believe in like sort of consumer protection, and that like ultimately that's what matters. And so my short answer is yes. But honestly, I also, I think that the space is ever evolving. So I may have a different opinion a year from now.
Yeah, I won't hold you to it. I'm no privacy expert either. It was just a question that popped into my head while I was listening to you. So you won't be held to account for any of your thoughts. Awesome. Thank you. Sort of like on that note, tangentially, it strikes me that like data is so important in making actionable insights, but at the same time, markets are so emotionally driven, right?
Yeah.
And like the best example of that is the sort of like malaise that we went through with the meme coin hype cycle that recently happened, where fundamentals were almost looked down on from a retail perspective at the very least. And it seems like a lot of that dust is clearing, and we're having a bit of a like return to fundamentals moment, which I find very refreshing and is nice to see. But I feel like you as a project that are working toward making real actionable data available to users so that they can make educated choices on what projects to participate in. I'm wondering, like, what is your thought on the sustainability of that? Like, is this actually a fundamental shift, or just the pendulum swinging the other way and we get back into the trenches in the next 6 months and everybody forgets about fundamentals again?
Yeah, no, that's a really great question. I think it's funny because like I also ask this question to all our customers like frequently. It's like as like a pulse check to everyone, and and definitely agree with you that I think we're like the pendulum is back to the fundamentals. like bit at the moment. But I think the reality is that I think the pendulum will always swing back and forth. I think that is true for any asset class, and I think it's like innately human to be caught up in euphoria. I think that's unless we can like cut out humans out of the loop, which in 2020 maybe that's possible because like AI is just like
Yeah, AI. Yeah, I think I heard on Bankless a couple of weeks ago, David Hoffman called humanity the bootloader for AI, which actually kind of hit home. And I was like, oh man, there's like a non-0% chance that is the case. And we're actually building all of this just so that the robots can talk to each other and transact. So that might actually happen. But yeah. I'm sorry, I didn't mean to cut you off.
No, not at all. I haven't heard that phrase, but that is aptly that summarizes what I think, what I feel as well in one sentence. That's no, but I do think that like overall, so here's what it's like more obvious to me. What's more obvious to me is that it's, I think the markets that it's all about the ratio of like how much capital is institution versus sort of retail. I think like if you're a large asset manager that has trillions of dollars in capital that you are investing on behalf of your like your customers, you have a fiduciary duty to not like YOLO into a token, right? Like you have to actually look at fundamentals, build an investment case, like present to the investment committee, and so like I think there will always be some amount of retail euphoria, but the more that institutions come in and deploy in these different asset classes, whether it's equities or tokens, it dampens the volatility. And I think there will always be like a GameStop like situation where like retail can crowd and come in and sort of like wrestle with institutions. But broadly speaking, like the sheer amount of capital that's like sitting with these large asset managers and pension funds, it's trillions and trillions of dollars. If they're deploying, it's hard for retail to, and I don't want to like pit retail institutions necessarily. I think that's kind of how I'm phrasing it, but it's more like, I think, right, like again, it's like these capital allocators, these institutions they allocate very slowly and diligently and deliberately. The more that these folks come in, the more, I think, the less volatility there will be. Yeah, obviously.
I think that makes sense.
But yeah, that's
maybe not pitting them against each other, but certainly different incentive structures and motivations and reactions to market movement. So like, that makes total sense. Yeah. Awesome. Moving on to sort of like the upcoming hype cycle, let's talk a little bit about stable coins. Everyone's talking about them right now, which is awesome, A, for crypto, and B, for us, because we're a stablecoin project. But from what you're seeing so far, like the numbers and the data versus the narrative, what's aligning and what isn't in your mind? Like, are you seeing any things that like the market is pricing incorrectly or like estimating correctly versus something that you see that in the numbers and the metrics that maybe a lot of people are missing or will be talking about in the next 3 to 6 months?
Yeah, that's a really good question. Let me think about this.
Yeah, you can definitely think about it for a little bit, but otherwise, like maybe a little bit of a more direct one while you're thinking about that. The fundamental metrics that are driving the stablecoin market right now, like what are you seeing in that? Like what are the key metrics that you look at when you want to gauge the success of a new stablecoin project or a protocol or a payment network?
Yeah, so I would say one number which is very obvious and one number that's maybe less obvious. And so the one that's obvious is obviously supply. I think that's like the universe. That's sort of the right. It's like the TVL equivalent for DeFi, but for stablecoins. And obviously that matters because that is directly correlated to how much the stablecoin issuer can get in yield. And that is like kind of like, for at least for most issuers, that's the main revenue source at the moment. And I think that the thing that actually people got wrong about Circle is that their supply has been growing tremendously in the last 6 months. And so I think there was a lot of like bearish takes on Circle's IPO because they had outdated information on how quickly they've been growing supply. And if you project that out, it's even I think if accounting for a slight decrease in interest rates, like that is a large revenue stream for Circle, and I think that's a more bullish case for Circle that a lot of people missed. And I think Circle ended up popping because there is really no other stablecoin like public bet you can make, right? It's like it's only by Coinbase or Circle. That's the only two sort of crypto companies that are public. And so I think like basically like Circle also being obviously like regulated is also that's the again only bet you can make in the United States. And so I think that those three sort of tailwinds really helped Circle out, right? And so that's one. So the supply is one, and then the other number is velocity, which I think if you ask any payment person, that is the number you should track for payments. But it's really not. Even on our side, like on Artemis side, we can do a better job of highlighting that. But that's actually what matters. It's about capital efficiency, right? And that's very different than the DeFi use case, where it's not about velocities. You want actually people holding onto and adding to supply. But stablecoins is basically the opposite. You want actually your same dollar to be used a bajillion times as much as possible. That's when you know you have like high payment usage. And so I would say those two metrics.
That's really interesting. So like to gauge the success of a stablecoin, you almost need to use inverse logic as you would with any other crypto project.
Yeah.
I wonder if anyone's put that together. Very cool. And it like in terms of velocity, I would assume like the incumbents USDC, USDT. Are there any upstarts, surprises, projects that are doing a surprising amount of velocity right now that you're aware of?
Yeah. So I think this actually answers your earlier question too. You asked me about like kind of
nice.
what I'm
pull it back in.
Yeah.
I like it.
I think well, especially I'm assuming you're American. We're given your American accent, and I'm also American.
I'm Canadian, but yeah.
Okay. Sorry. But North American. I'm here in New York, and so I think we as North Americans are living in our own little bubble when it comes to also like blockchains and projects of choice. If you look at the on-chain data, and this is the most surprising thing from our recent report, which is that there's like a sheer dominance of Tron as a blockchain of choice for all things payments, and for I don't have the exact number with me, but I would be willing to bet that their velocity is quite high, especially because Tron is not super active in DeFi, and so that means that Tron and because the fees are still relatively low on Tron, it is gone up recently, but in that sense, like Tron, and I think because of just early movers advantage, it's a low cost blockchain. Tether is obviously there's a lot of supply of Tether, and Tether is the currency of choice for really everyone outside of like US and Europe. That means that like Tron just has this massive first movers advantage in terms of like stablecoin payment usage. It is just like and the number two is Ethereum, and then everybody else is like super far back. Like it's not even like a competition. It's just pure duality. It's just Tron and Ethereum. And so we don't hear that as much, I think, as opposed to like USDT versus USDC. I think that's a more obvious duopoly.
Yeah, that's really interesting. It is funny, like I can't remember what the podcast was. I was listening to something, and basically the sentiment was Tether is typically looked at with a degree of hesitance for users in North America, and it's the inverse. USDC is actually perceived to be the less trustworthy asset to those outside of North America, which is a really interesting contrast.
Oh, interesting. Yeah, we'd love to see that. If it's a survey or like a report, we'd love to see it. Because I anecdotally have been hearing that too when we talk to founders and builders in the space, especially those who are in the BRICS countries or like ex-United States, because they don't want to get sort of tangled up in the long arm of like U.S. foreign policy, right? And so they actually see USDT as a liability. They see USDT as like, okay, like the DOJ is not gonna come after me if I use this, which may be like unfounded fear, but like that is like literally what I hear on the ground as I talk to builders and in the stablecoin.
Yeah, I mean, if you learn anything from working in crypto or in stablecoins or in money generally, you learn that belief often trumps reality or data or metrics or expectations. Yeah, it's a super interesting space. Cool. We're coming close to the bottom of the hour, but just as like a pullback to Artemis specifically, what are you seeing? What groups, individuals, organizations benefit most from the data that Artemis is providing? Some of the interesting use cases that you've seen people use Artemis for.
Yeah, I would say one thing that really gets me excited every day about Artemis and crypto, frankly, is that it is just a lot more accessible industry to enter as like an investor than traditional finance. And so we have a lot of actually students sign up for our product so that they can learn more about crypto, learn more what to invest in, and frankly, these young adults are they're going to be future investors, and they're the future generations that will be making investment decisions, like powering the future of finance. And I think that is something that and I think that the other personas are kind of obvious, right? It's like we have also asset managers, institutions, hedge fund managers using our product, and we try to we make the product free for anyone to use, and we charge a small fee for downloading the data so that we can pay our bills. But so frankly, it's like really anyone. But I think the one persona that I like to call out is sort of like people who are in their beginning journey entering into investing in crypto, and we love to support those folks because we truly believe in this like world where investing shouldn't be just investing shouldn't be the activity that only a couple of folks whose parents work in Wall Street can have access to. It should be democratized, and I truly believe in that.
For sure, that's why we're all here, to give financial tools to the masses.
Yeah.
Sometimes whether they want them or not.
Yeah.
Amazing. Cool. Awesome. This has been great. Was there anything else that you wanted to cover before we wrapped?
I think just you can find us at Artemis on Twitter.
Fantastic.
And or now called X. And yeah, if you ever want to reach out to me personally, my Twitter handle is Anthony Yim. That's ANTHONYYM. And yeah, look forward to seeing you guys around.
Fantastic. Thank you, Anthony. I appreciate the time. This is a great chat.
Thank you. Yeah, I had a lot of fun. Thanks, Dave.